Hello, traders. I hope you are all doing well. It's been a while since the last time I did a video here. Okay, but first of all, let me take this opportunity to thank all of you guys for showing interest in watching my content, liking my videos, commenting, and also sharing the videos. By doing so, gives me motivation to keep going. So I'm really grateful for you guys. For those who have maybe not subscribed to the channel, I kindly request you make sure to subscribe to the channel and also don't forget to turn on the notification bell so that you get notified immediately I upload a new video. So there is this topic that have been requested by majority of you to do a topic on liquidity and inducement, and I said, why not, guys? All right. So today I want us to talk about liquidity and inducement, and how can you use it to your advantage? Okay. You know very well. If you don't understand this concept of liquidity and inducement, they say if you cannot spot liquidity, then be aware that you yourself, you're going to be liquidity to the market. Okay. So let's dive in and see what is liquidity and how can you use it into your advantage. So let me start. First of all, start by asking you, what do you understand by the term liquidity? So for me, in simple definition of the term liquidity, liquidity simply means fuel or the money. Like a vehicle, for a vehicle to move, it needs liquidity or it needs fuel or what we call a gas. Okay. The same to the market. For market to move or for what we call the smart money to move the market, they need liquidity. And where are they going to get this liquidity from? So they are going to get this liquidity from our pending orders or our stop losses. Because where is this where we have our pending orders and stop losses, that is where the liquidity is. So in simple terms, liquidity simply means money. Or in other words, you can say it is a pending orders and stop losses. Okay, that is what we call liquidity. What about inducement? So for me, according to my understanding of the term inducement, is inducement simply means trap. Okay, so when the market movers are moving the market, they are going to set these traps everywhere. So if you are not careful or if you don't understand well the market structure, you're gonna find yourself getting trapped by the smart money. But don't worry, because today I got you covered. That is what I'm gonna help you understand and maybe to be able to spot this inducement in the charts. Okay. So whenever we have a market moving to the upside, for instance, we have a trending market like this. We can see this market is really bullish. Okay. So for this matter, when the market is really bullish, where do we expect to see? Where do we expect to have liquidity? So within the swing eyes, these swing eyes, that is where the liquidity is resting, right? Because when the market is coming for the pullback, when this pullback is over, the market movers they gonna move this market to the upside to take out this high. That is to mean there were pending orders or stop losses that were above this high. So that is will be the next target of this market. The same to this high here. When the market is done with this pullback, it's gonna push up and take out this high, meaning there is liquidity that is resting above this eye. So above every turning point, we have got liquidity. So for instance, when the market is pushing up above the swing eyes, that is where we have the liquidity because we expect the swing lows to be protected. All right. I believe you understand that point. Now, I need you to understand when the market is moving, when the market movers they are moving the market either to the upside or to the downside. They have only two intention while they are moving the market. Whenever you have an impulsive move to the upside, market is always creating liquidity. Okay, so when we have an impulsive move to the upside, market is creating liquidity. Whenever we have this pullback, when the market is in a pullback phase, what is it doing? It is collecting the liquidity that it created while it was in this impulsive move to the to the upside. Once the market collects the enough liquidity that it want, it is gonna push up. We're gonna see a very good rally to the upside. again. Once, because now when the market is moving to the upside, it creates more liquidity, right? Once it takes out this high, because as much as it is creating more liquidity, it is also hunting for this liquidity. Once it sweeps this liquidity, it's gonna come for a correction phase, or what you call a pullback. Once the market is coming, as the market is coming for this pullback, it's gonna target this liquidity. So where is the liquidity? Liquidity is resting within the internal structure, the structure that was formed when the market was in this impulsive move. So that is where the liquidity is resting. So you will see the market coming down to the downside to sweep some liquidity before engineering the buy movement. And this is how always the market move. Okay. The same case applies when the market is trending to the downside. As it is having that rally to the downside, creates more liquidity. When it's coming for the pullback, it is hunting for that liquidity. All right. And what have we said? What is liquidity? We have said liquidity is simply the pending orders and the stop losses. Where is the pending order? Because we have said behind the pending orders, that's where we have the money. Behind the stop loss, that is where we have the money. So the smart money, they are always going to target or to hunt for that liquidity. Once they take the enough liquidity, or once they get enough money, they gonna engineer that impulsive move from that area. Okay. I believe now you understand what is liquidity. When it comes to an inducement, we have said inducement, it simply means the trap. Okay. So I want to give you an example from this illustration that we have drawn here. Okay. We are going to use this illustration. We see that we can see the market is giving us a break of structure here to the upside, right? Okay, if you look at this impulsive to move to the upside, what do you see? You can see that the market is really trending. You can see some bullish break of structure here inside this structure. You can see we have this break. We also got this break of structure here to the upside, and we still have this break of structure to the to the upside. Okay, so this one simply means what? This market, when the market was moving to the upside, it was really respecting these laws, right? You can see the market is not really closing below this law, right? You can see the market is respecting these laws. Yeah. Okay. So once the market comes down, because simply someone is going to see this one as a good area for you to buy from. Okay. So what are they going to do? They are going to set their orders around this area. Where is the stop loss? Stop loss is going to be down there, and then target is going to be this up here. So this means what? This demand zone that you are seeing here, it is a trap, guys. So this is what we are calling a trap. So this is what is going to attract more buyers, that is more retail traders, to set their orders around this area without knowing that this low here is a trap. Okay. Now, I want to give you another example. Let's look at this break of structure, right? Assuming, not as some assuming, this is our strong law. If you have been following me, you know very well how we identify a strong law. If you don't know, if the market is moving like this, when the market comes for a pullback and it sweeps some internal structures, this law has cleared the internal structures for within this impulsive move, the upside. This is where impulsive move, this phase here is what we call a correction move. So the liquidity, it's always resting within the impulsive move, not within the correction move. I've seen a lot of you guys making that mistake. Okay. So liquidity is always resting within the impulsive move. If the market is moving to the downside, be aware that the impulsive move is always that movement to the downside. Then the pullback is that movement to the upside, the small pullback and then continuation. Okay. So liquidity, we have said it's always resting within the impulsive move. So when the market was coming for this pullback and it sweeps some internal structures, okay? For this illustration, we can see that the market swept this low. We can see the market also swept this low, and also the market swept this low as liquidity. So this low were used by the market as liquidity. Okay, because remember we have said below every turning point we have liquidity resting. Okay, when the market is moving to the upside like this, when you have this internal structure. So this, whenever the market takes out the external structure, internal becomes liquidity. So what do we expect? We expect the market to come down, sweep some liquidity before engineering their movement. And that is exactly what we are seeing here. So this law becomes a protected law or a strong law. Okay. So now, once the market takes out this external structure, now I need to show you how we can spot inducement very easily. Okay. If you look closely, if you have any structure, because remember we have said once the market takes out the external structure, the internal structure becomes liquidity. So what is the internal structure of this swing structure of ours? Because the swing is coming from this high all the way to this low. So it means this is your internal low and also this is your internal low. Okay. So for instance, if you have any structure that is resting within the premium, how do we identify the premium? We use this Fibonacci retracement tool like that. So for instance, assuming now we have this structure there, okay, we have that structure around that area. Okay, so you can see that this structure is simply resting where? Within the premium. That is one way of knowing where is your inducement. Because we have said inducement is simply the trap. So you know there these people who are going to see this one as a breakout structure because of this internal breakout structure. So they are going to set their orders around this area. Okay, they set their buy limit order here, stop losses below here, and then hoping the market will respect that low and push up to target this high. Without knowing now, this demand zone that we are seeing here it was created intentionally by the smart money the smart money only to lure in retail traders to set their orders or to take their entries prematurely before the market is ready to do that. So what they are going to do, and because they are very smart, they are going to give you a reaction once they get to this area. You're going to see some small reaction just to induce more early buyers. Because once the people will see, maybe they can give you something like an engulfing candle for those who take that one as a confirmation. So that means they are going to add more position only to realize that market was creating more liquidity. So the market will take them out, come to a discount area, and then they will react from there. So these demand zones here, you can see these two demand zones here, they are acting as inducement. Okay, these two demand zones, they are acting as inducement. So what did the market do? The market came down, reacted from an area or a demand zone down here, and then that is when the smart money engineered their movement. Okay, so below these traps or below these inducements, that is where we have liquidity resting. Okay, we have liquidity below here because we have said we expect to have some buying orders here. Okay, set around this area. We expect to have by some buy orders set around this area, meaning stop losses. We have some pending orders here and stop losses below here. So we have liquidity below here and you have liquidity below here. I believe now you understand the concept of liquidity and inducement. Okay, so we have had me talking about major and minor inducement. I want to give you an example to illustrate that. So assuming now the market is moving to the upside like this, then you have something of this sort. So first of all, you can see we have this very nice break of structure here. Okay, we can agree with me that is a very nice break of structure. This law, it's a very strong law because first of all, it took out this law as liquidity. Okay, you can see that the market took out this law here first as liquidity. So there was liquidity that was grabbed around that area before the market pushed to get to take out this eye. Okay, after the market took out this eye, you can see the market created a certain structure here. Okay, this is a break of structure, right? You can also see this was another internal structure. Do you know someone is gonna see this area is a very good area to buy from? Someone else is gonna see this as a good area to buy from. Okay, but for this second one, I don't have a problem with this zone because one, it is sitting at a discount, so market can decide to respect this law. But for this case, okay, so this is what we have called an inducement, guys. Okay, because if even if when you look at this law here, it never swept any liquidity within this impulsive move. That is one red flag. Okay, you can't see this low sweeping liquidity within this impulsive move, meaning this is a very weak low. So that is to mean this structure that is created here, it's gonna be a fake BOS. Okay, so market has given a fake breakout around this area just to lure more retail traders to set their buy limit around this area. So when the market starts coming for a pullback, they're gonna use this area as an inducement. Okay, because we have a lot of orders set around this area. That means we have liquidity below this low. So they are going to use this low as liquidity. And this is what what I call a major inducement. Major inducement is created after a valid break of structure. We have a break of structure here, right? Any structure that is created after this break of structure, so long as this structure never swept liquidity, we call this one a major inducement. It simply means it's a trap. Okay, so any other structure that is formed before the break of structure, we call it a minor inducement. So for this example, this low here becomes your minor inducement. Okay, so if for instance this minor inducement is sitting at the premium, we expect the market to sweep it. Okay, because when the market is coming for this pullback, you know very well we expect the market to trade to the discount or below the 50% before engineering this buy movement. Okay, so that means any internal structure that is sitting at the premium, it's gonna be used as liquidity. Okay, all right, or in other words, it's gonna be an inducement. Now since now you understand that, I need us to go to the chart and be able and see whether we can spot this inducement and this liquidity. Where is the liquidity? Okay, so in front of you, we have USD JPY pair from the monthly time frame. Okay, all right, so now we can agree with me that here we have a structure, right? Someone is gonna see this one as a structure. Okay, that is to mean what? They are going to buy from this area. Okay, they are going to set their buy limit, sell limit orders around this area. How will they do? They are going to set their orders around this area. Where is the stop loss? They are going to set the stop loss above there, and then they are going to target this low. What the market do? When the market came back, it took them out. Why did the market take them out? First of all, this is not a valid pullback. Okay, so if you have been following me here, you know very well how do we identify a valid pullback. And how do we do that? A valid pullback should have at least 3 consecutive candles. Okay, so for this case, we don't have even, we just have like one candle pullback. Is it one or two? We have 2 candles, so we don't have 3 candlestick pullback. Again, this eye here never swept any liquidity. So that is to mean this structure that we are seeing here doesn't qualify to be a valid break of structure for us. It is the same as this one. So these are what we call the fractal structure. Any structure that doesn't have a valid pullback, it becomes a fractal structure. So for this case, this is a fractal structure, this is a fractal structure. So that means what? This I is going to act as liquidity, this I is going to act as liquidity. So what are we seeing? The market came up, swept these 2 internal structures or these 2 fractal structures before pushing down to give you a real break of structure. Okay, let me remove this. We can see very clearly now we have got a break of structure here to the downside. Now this is what you call a valid BOS. How does it qualify to be a valid BOS? First of all, we have to see a valid pullback. A valid pullback, we have said, it should have at least 3 consecutive candles closing above each other. Okay. Secondly, the eye of this pullback should have swept liquidity. And where do we get liquidity from? From any internal structure within the impulsive move. Remember what we have said? When the market is moving to the downside, this rally to the downside, this is what we call an impulsive move. So we expect the liquidity to be resting within this impulsive move. So any fractal structure, any internal structure that is within this structure becomes liquidity. Okay? So that means what? This supply zone that we are seeing here, it's going to act as an inducement. Because what have you said inducement is? Inducement is simply a trap. So this is a trap that was set by the smart money just to lure more retail traders to set their limit orders here. Okay? All right, I believe you understand that. Since now the market took out that high, swept this internal structure, and gave you a break of structure, it means now this is your protected high at that moment. Okay, so we don't expect the market to go beyond that high unless it wants to give you a change of character to the upside. Okay, so let's look at this next pullback. For this one, definitely this is a valid pullback because you can see uh, more than three candlestick closing above each other. So meaning we have got a valid BOS to the downside. Now the question is this a valid, is it a strong high? So what have we said? How do we identify whether this is a strong high? We need to see the market sweeping liquidity within the impulsive move to the downside. This is your rally to the downside. So any fractal structure, any internal structure that will be within this move, so long as it's resting at the discount, becomes liquidity. Okay. So what do we have? We have got this fractal break here. You can agree with me. We have this fractal break here. Okay. We still have this fractal breakdown here. And we also have this fractal break here. We also have this fractal break here. And then we also got this fractal break here. So once the market takes out the external structure, internal becomes liquidity. So above all this internal structure that we have marked, there is liquidity resting there. We have liquidity resting there. We have liquidity resting there. So when the market is coming for this pullback, what have we said? We have said the market is hunting for liquidity. Where is it? Where is this liquidity from? We have this, and this. So for this case, market swept this high. You can see the market swept this high. Sorry. You can see the market sweeping this high. I don't know whether the market swept this. No, never swept that. But swept this high and swept this low. And so also to sweep this high here. Okay. So I want us to see what have we said. Any liquidity that is resting within the discount becomes any structure that is resting within the discount becomes liquidity. We have seen we have this one, we have this one. So around this area, these are the areas that you should not be looking for any selling opportunity. Do you see this area? This area here, this is what you are calling an inducement. So this is a trap. Okay. Although this one looks like a one candlestick pullback, but when you go down to the lower time, when you go to the weekly, this is gonna be 4 weeks price action. So you're gonna see four candlestick closing above each other, meaning this is gonna be a valid structure from the lower time frame. But since now you understand this, you will not look for any selling opportunity from there because one, this is a red flag because this structure is simply resting at the premium at the discount, and we don't have any business to sell while the market is still at the discount. We expect them to sell when the price is high, and where is your high? Your high is always within the premium. Okay, so for this case, market also used this one as liquidity, fail to sweep this high. So it's not a must for a market to sweep all this internal structure. Okay. Remember, we have said the retail traders, they will give you an indication once they take the enough liquidity that they want to see. You can see the kind of momentum that we are getting here after the market swept this liquidity here. You can see the kind of engulfing candle that we are having here, a very strong bearish candle. That is a signal that we are now moving to the downside. Okay. So now I believe now you understand that. Okay. So that is to mean this high here becomes a very strong high. This is your protected high because it swept this internal fractal structure. Okay. So since now we have this one as our valid BOS, we have this one as our valid BOS. Let's move on. What can we see? We have got this fractal structure. We have said this one does not qualify to be a structure because we don't have a valid pullback. So it becomes a fractal structure. We also have this one as a fractal structure also. Okay. What about this one? This next one. We have this one as. So this is a valid pullback. First of all, you can see three candlesticks closing above each other. You see 1, 2, 3. So meaning this is a valid pullback. Meaning we have a structure here. But what is the problem with this structure? If you look at this pullback, did it sweep any liquidity within the impulsive move? No. So that means this high becomes a weak high. So this high will act as liquidity. Okay, even though we have a structure here, we have a valid pullback, but this I never swept liquidity, so it's gonna be act as inducement. Okay, or it's gonna act as our liquidity. Okay, so what are we seeing? And that is exactly what the market did. So when the market was coming back, took out this high as liquidity. Okay, because we have said above every turning point you have liquidity, right? So we have liquidity resting above this area. Since this is our inducement, this supply zone here is our inducement. So we expect this supply zone to fail because this is not a strong eye. So what the market do? Market did exactly that. Swept this eye before coming down to give you a break of structure to the downside. Now this break of structure that we are seeing here is really a valid BOS. Why is it a valid BOS? Because you can see this I swept this liquidity. Okay. All right. So now what are we seeing again here? What do you expect? We have said once the market takes out the external structure, the internal structure becomes liquidity. So what are the internal structure of this dealing range? Because our dealing range comes from this high all the way to this low. So every structure, any internal structure that is within this leg becomes an internal structure. So we have got this break, right? We have this break here. We have this break here. And then we have this break here. Okay, so all these structures becomes liquidity. Okay, so any structure, first of all, any structure that will be resting within the discount, that is first of all a red flag. So you should not be looking for any selling opportunity within those structures. So that is what we are calling inducement. Okay, so for this case, if we put our fib from up there all the way down there, so for these structures, first of all, that is resting here, we have this structure, we have this structure. That is liquidity, guys. And you should not be looking for any selling opportunity within these areas. Okay. You see, the market used that one as an inducement. Yeah. Market, when the market, and what did we say? Once the market comes to that area, they're going to give you that small reaction. Are you seeing it? You can see market had a 1 month bearish movement just to lure more retail traders to take their early sells, only to realize they are going to be liquidated. Okay, so market swept that, also swept this liquidity here. You can also see the market sweeping this high, and you can also see the market sweeping this high. So for this example, market swept all these internal structures. Okay, so once the smart money got the enough money or the enough liquidity, what are you seeing? They engineered their sell movement now, and they push this market to the downside to give you a real breakout structure to the downside. Now you have a new BOS to the downside. Okay, so what are we expecting? We are expecting this eye to be our protected eye. We don't expect the market to close above here. If the market by any means closes above there, now we have a change of character. Okay, and we can see exactly market closed above there. Okay, so now we have a change of character to the upside at that moment. But I need you to show you something here. At this example here, although this is not what we are, is not part of what we are talking about today, but let me show you something. When the market was moving to the downside, when it made this breakout structure to the downside, there is something that happened here. Do you see the market never came for 50%, at least for 50% of the daily range, because we assume the pullback started from here. So when you peg this fib, place from there all the way to this low, do we see the market coming to the 50%? It never did so. So what do you expect? Now, this dealing range was never mitigated. So market never came for the valid pullback. So what am I expecting? So even if the market is giving me this change of character, but for me, I don't trust this change of character. So this one, for me, is just to facilitate the pullback for a market to come around this area. Okay, so for me, I will use all this movement from up there, okay, all the way down here as one structure. So what do I expect? I expect the market to trade above the 50%, or at least to the 50%, and then we continue selling to the downside. Because even when you look at this area here, we have a lot of liquidity void. All right. So market left a lot of imbalances here. You can see a lot of inefficiency here. This is what we call inefficiency. This is gap. So this inefficiency, this is what is going to act as magnet. So this is going to attract market to come to this area, fill this gap or this inefficiency before we start dropping to the downside, because this was never mitigated. Okay, so as much as we are seeing this change of character, for me, this is just to facilitate the pullback for a market to come to this inefficiency here, try to fill this gap, and then we continue selling to the downside. Because if you look at this market, we are really bearish. Okay, so that is what we see. But let's continue analyzing this market. So what have we said? When the market takes out the external structure, internal becomes liquidity. Okay, so what is our internal? You can see this low first, right? You can also see this low here, and we can also see this more low down here. But is the market ready for the pullback? Because the market has not yet shown us intention of the pullback. So what are we seeing? We are seeing another BOS here. And guys, before I forget, guys, if you want to learn all this one-on-one with me, I do run a private mentorship one-on-one with me. So if you really want to elevate your knowledge in terms of understanding the market structure, you can find the link on the description of this video. Also, the charges for the mentorship are also indicated there. So if you are ready to join any of the mentorship, make sure to to text me on WhatsApp, and I will guide you on how to get started. So thank you, and let's move on with our video today. Okay, so you can see now we have this break of structure here. First question I will always ask myself, is this a valid is this a valid break of structure? Yes, it is. One, we can see a valid pullback, right? You can see 1, 2, 3 candlestick pullback, right? This law is also a strong law. Why? It swept this liquidity, right? We can see we have a fractal break here. Okay, so market swept that law before coming to break this structure. So we have a very valid breakout structure. So the same thing as we have seen here, market is doing the same thing here. If you look at this pullback never came to the 50%. If I place my fib from up there all the way down here, you can see this is where we have the 50%. And we have said a valid pullback should come at least to the 50% before we continue pushing up. So what do you expect? You expect the market to come at least to this 50% before continue to push up. But since the market is very close to this 50% of this leaning range, and we have a lot of inefficiency around this area. So it's not a must for a market to come to this 50% before we continue going up, right? So because we know for a fact, once this pullback is over, market is gonna crash down. So it's not a must for a market to feel this to come to this 50% first of all before coming to this area. If the market can come to this area, feel this inefficiency, and then give you that selling opportunity, be aware the market will eventually come down to these areas and take this low to give you a new break of structure to the downside. But according to what we are learning, this is where we are. Okay. So since the market took out this external structure, right? You don't expect these structures to hold. Okay, sometimes they might hold, but when the market decide to come for a pullback, you don't expect this structure to hold. Why? Because first of all, these structures are resting at the premium. Okay, so this is what we are calling inducement. We expect this demand zone to act as an inducement, and that is exactly what happened. So market closed below this low, meaning it violated this zone. It went ahead and swept liquidity below this low before pushing up to give you a break of structure to the upside. Again, the same thing is happening here. You can see we have a fractal break here, right? So what are we seeing? What are we expecting? We were expecting this demand zone to hold. But what are we seeing? This demand zone acts as an inducement, because when you go to the weekly, this is going to be a structure. You can see very clearly from the weekly, you have a pullback and then a break to the upside. Let's go to the daily first of all. From the daily time frame, whatever seemed to be fractal on the weekly, from the daily it's going to be a structure. You see, we have a pullback. and then a break of structure to the upside. But since the higher time frame are more powerful than the lower time frame, that is why you are seeing the market taking out this low and using this demand zone as an inducement. Okay, so there was liquidity that was resting below this low. Okay, also, so that is to mean this is our major inducement. So market took that one out and also swept this minor inducement. So market swept liquidity below this low, swept liquidity below this low before pushing, starting to go up. If you place your fib from the high to the low, you can see for this case, this pullback is very valid because the market already traded the discount. You can see the market sweeping liquidity below this low, and now since then they started engineering their buy movement. So what is the next target of liquidity? It is gonna be this buy side liquidity. Okay, we have this eye here. This is where we have the next target of liquidity. So because the market is very close to this eye, you don't expect the market to have that deeper pullback before taking out this eye. So what do you expect? You expect the market to take out this eye first. Okay. You expect to see something of this sort, and then maybe a small pullback, and then we continue going up. Okay. So that is it, guys, about the liquidity and the inducement. In case you have any question concerning this, let's drop that comment on the comment section. Okay. And I'll see you on Sunday, guys, to give you the market update for the coming week. So until then, it's a bye bye for now.